So moving on with our balance sheet. Okay, we need to finish off with our owner's equity. So owner's equity. Okay, we should make an apostrophe there. Owner's equity. Make that a bold heading, and we start with our capital. Capital 185. Fingers crossed this all balances, so tick off our capital. And so we need to add net profit. And our net profit comes from our income statement, so from here we can go equals, head up to our net profit figure, enter, okay, and subtotal those. So we'll give it an underline, auto sum those two. Okay, looking close, so we need to less drawings. Our drawings 619. So we want to subtotal that one there with a single line, equals 409 minus 619 gives us 409,275. Look at that, beautiful. It's a beautiful thing. Okay, there is our balance sheet done. Everything balances, so this is what I'm talking about here. To start our exam style question, I think it's best to classify and put all of this information in and make sure our balance sheet is correct. Then we can move on with our journal entries and then bring those journal entries across into here and make those changes. So with our general journals, okay, our balance day adjustments, come back across to our general journal page and we want to put a business name at the top. And Roach again. Okay, so our first balance day adjustment, over to the right, insurance of $8,600 was paid in advance. So, as you all know by now, since you are all gurus, that our journal entry needs to be, so June 30, we want to debit prepaid expenses, $8,600, and we want to credit insurance $8,600. Again, now with these questions under exam conditions, okay, we're not asking for you to do any narrations. We've tested that before, so let's quickly scoot through these and not worry about narrations in these instances. Okay, so our next balance day adjustment, rent revenue amount includes $500, which is rent for July. So what we've got there is some unearned revenue. So we need to, our rent revenue, we need to decrease our rent revenue. So we need to debit our unearned revenue. Hang on. My bad, of course, it's rent revenue. If we want to decrease it, we need to debit it, naturally. Okay, so we want rent revenue. Okay, so formatting here is a little messed up, so I just want to take that back there, and our figure is $500. And our credit is unearned revenue. We've been paid the money, but we haven't performed the service or provided the service yet. Underline that journal entry. Okay, and we move on. Tick things as we go so that we know that what we've done and what we haven't done. Okay, so with the next balance day adjustment requires a little bit of maths. So the scenario is electricity bill is due on the 30th of August for 3 months prior. The bill is estimated to be $1,200. So it's due on the 30th of August, okay, and paid in arrears. So that means, okay, for 3 months, we divide that $1,200 up into 3, so it's essentially $400 per month. So that would mean that our bill is applicable $400 for June, $400 for July, and $400 for August. So we want to journal in and account for the $400 that relates to the current financial year. So that figure would be the $400 for June. So what we want to do is this is accrued expenses. So we want to increase our expense account, which is electricity, for $400. And we want to credit accrued expenses also for $400. Okay, and our last balance day adjustment that we've got there, interest expense yet to be charged on mortgage for June has been calculated at $530. So again, that's another accrued expense. And so we want to, first of all, increase our expense account. So interest expense. Okay, again, formatting a little stuffed up there, so we'll just bring that back. And the amount is $530. And credit accrued expense, accrued expenses, $530. While we're here, we'll do our GST clearing journal entries. Okay, so June 30. So GST collected is a credit balance of $8,000, so we want to bring it down to 0. GST collected, we debit $8,000, and we credit GST clearing. Likewise for GST credits received, okay, we debit GST clearing, and our amount is $3,500. And we credit GST credits received, $3,500. Okay, so it's at this stage that, according to my tips and my steps that I outlined before, we split our screens. So we add a new window, view, arrange all, vertical, windows of active workbook. And we get our statements off to the right, our journal entries off to the left, and we start making our changes to our income statement and our balance sheet from our balance day adjustments. Okay, so what we can do, we're just posting these line by line, and because all of our totals are linked up by formulas, any change that we make will flow down into these final balances of our balance sheet. So as we post each particular entry, okay, each journal in full, we will double check that our balance sheet balances at the end. Okay, so let's do the first one, prepaid expenses. So prepaid expenses being an asset, we want to bring them over into our balance sheet. Now, as I've been talking about through the term, okay, we'll have our highly liquid assets here, and we'll slot our balance day adjustment accounts in between our liquid assets and our long-term and intangibles here. So we'll put in prepaid expenses here. Okay, we're debiting, we're increasing our assets by $8,600. So we want to put an increasing $8,600 in there. You can see by making that adjustment, our balance sheet has now been thrown out. We'll just color code things as we go, just so that we know what we've posted, just in case we get lost, particularly under exam conditions. You don't want to get lost with where you're up to. Okay, and we want to decrease insurance by $8,600. So we can come up here to insurance, Okay. The easiest way, let Excel do the maths for you. So we can go equals 25,000 minus 8,600. That then flows down into our profit figure, and that profit figure now flows down into our balance sheet, into our net profit, and we can see now our balance sheet balances again. Okay, so we do the same. Rent revenue, we want to debit rent revenue. Rent revenue being a credit, okay, we need to take that figure away. Okay, so we come up here to rent revenue, and again, create a formula. Although you might be able to do it in your head, using the formulas also provides a record of where you've been. Okay, so minus 500, and that change then flows right down through our balance sheet, and our balance sheet will be out by $500. Okay, now we need to add in unearned revenue. Unearned revenue is a liability. I think we'll put it in here. So unearned revenue is $500. That will then change our totals, which again flows down into our balance sheet, and our balance sheet balances. Okay, same again, electricity. Okay, we're increasing our electricity expense by $400. So using our formula equals, and we're increasing it. It's a debit, $400. That change will flow through. We're not folioing, but we're trying to keep track of where we've been. Accrued expenses, liabilities. So again, we come down here into our liabilities, insert a line, and we add in accrued expenses, $400. That change flows down, and our balance sheet balances. Interest expense, okay, needs to be added in. So we'll insert a line, interest expense. Interest expense amount is $530. That change will flow down, and we add to our accrued expenses $530. So come down here to our accrued expenses. Okay, again, use formulas. Equals, because we need to add that to our existing amount that's there. $530. Our balance sheet is in balance. Now let's quickly do our GST clearing before this video runs out. So what we'll do is we will add in GST clearing. And so GST collected now goes down by 8,000. GST collected goes down by 8,000. Our GST clearing goes up by 1,000. Okay, our GST clearing, I'm trying to beat the clock here before my 15 minutes comes up on this video. So 8,000 minus 3,500 from this journal entry here. And our GST credits received is actually going to go up 3,500 because we are crediting it, taking it from a debit to a credit. Okay. So we've got zero balances in our GST collected, GST credits received. We can leave them there like that, or we might elect to hide them. Okay, our balance sheet is in balance after all our journals. We need to post all of these over here because when we close off to trading and profit and loss, we need to close off these new updated balances instead of our old balances. So we do this before we close off to trading and profit and loss.